Welcome to Trade of the Week with me and Taoleng Lechela. Up for analysis this week, Afrimat, Mondi and Nedbank. And joining us with his survey of these counters is Petri Redelinghuys, founder of Herenya Capital. Petri, thanks so much for your time today. Now, what caught my attention from these three stocks is that it seems like they're somewhat dependent on external factors as well as how well the economy does to perform extremely well. The likes of an Nedbank and an Afrimat, more of your SA Inc. players, whereas Mondi is more reliant on the European economy.
Well, yeah, okay, it's a good observation, actually, so thank you for that. I think that something that we've been talking about on this show and others for some time is that the emerging markets are sort of in a space where we believe that they're going to come into favor quite a bit. And if you look at our market performance, for example, compared to that of the US market for the year, we've done fairly well compared to them. We've outperformed them by some margin. Now, over the long term, over 10 years, we can still double our market before we catch up to where the US is, right? However, you know, in sort of the current economic condition, it seems as though market participants are willing to take risk again. We have an easing sort of interest rate environment. South Africa is currently sort of the prettiest girl at the ball, if you will. There's a lot of emerging market options out there. South Africa has been one of the preferred ones for a long time. We have our challenges. We shot ourselves in the foot with electricity for 20 years.
Yeah.
Right?
Things look to be coming right, but then we now have the water issues. But anyway, that's besides the point.
The water issue is a bigger one than what I think we are aware of at this stage. It's a big issue, right? But it is, we've seen, there are no issues we can't overcome. Yeah. Right? I think we have a couple of things working in our favor. We've had like a 1% GDP growth. Now, can you imagine if it might stay on for another couple of years, the government of national unity remains stable, and the political landscape becomes more and more diversified, where I don't think that South Africa moves back into a space where we have one party ruling the country again. I think we have coalition governments from this point forward, and if those coalition governments can stay stable, we can get a handle on the corruption issue, which slowly is starting to come right, and the power stays on. I think that there's a lot of upside for us, right? There's a lot of potential and a lot of untapped into growth that we can experience here, and that is going to be great for our economy. So the likes of the banks, the likes of Afrimat, these are sort of very exposed to the local economy, but a little bit of local economic growth, and we can see what that does to the earnings of these companies. Can you imagine we move into a space where we're having 3 or 4 or 5% economic growth because there's some policy shifts or whatever the case is, and stable electricity and stable government and that sort of thing. I think we can have massive upside here for SA Inc., if you will. So that's a very positive outlook, I guess. I should just put a disclaimer to that and saying, like, look, that's not going to happen next week, right? This is the next 5 to 10 years, the next 2, maybe even 3 election cycles, right? This is a long-term view. So massive upside potential doesn't mean that, you know,
it's going to happen now.
Sell your house, buy stocks, right? Not the advice I'm giving here today. But that does mean that we do see opportunity in the local market. In the offshore world, yes, Mondi is more exposed to European markets than they are locally. But to be fair, and I think I just want to put a small caveat here, Mondi is very opportunistic. We see that there was sort of a catalyst event and a big drop in the share price very, very quickly. And that's taken it back to a very long-term support level or previous resistance level from like a decade ago. So we think that this is a good opportunity to buy some for the riskier traders out there. Potentially, maybe not a trade you want to get into for the longer-term investor. That's more your Afrimat. That's more your sort of your Nedbanks. But for those who are willing to stomach a little bit of risk, even the longer-term guys could probably get involved here. Just don't bet the farm, as the saying goes, right? This is a very speculative trade. I don't know if you want to have a look at the chart here.
Yeah, let's stop.
So I've put this big fat white line over here at sort of 201. Now, this is more of a zone rather than a specific level, right?
Okay. At 201.
At 201-ish, yeah. So we can see here in the past that this was quite a strong resistance level. We tried to get through here this is a space of like a year, right? So we're starting, the first time we knocked on this level here was February 2014, and when we eventually broke it, it was January 2015. So a year later, we managed to get through this level. Then the stock rallied very, very hard, over a period of time, and a whole bunch of fundamental things happened, including a global pandemic, blah, 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 the whole sort of story, right? What we have now is a situation where this stock basically just gapped down and smacked onto that level.
Yeah.
So at this stage, I'm going to switch to a daily chart instead of a weekly chart.
Yeah.
And we can see that yesterday, essentially...
wasn't it down 17% or something?
Yeah, it was massive, right? But it hit this level and bounced there, right? And today we're kind of flirting with that level as well. So for us, we see this as a one of those sort of very... I don't know. You could say it's like I wouldn't call it like a once in a a massive opportunity, the biggest opportunity for the year.
Yes.
But this is a very high probability play, right? The probability that this 201 level holds, it might dance around here over the next couple of days, but the probability that this holds and we probably go to close this gap is relatively high. We see this as the chances that this holds and goes to sort of 242, 243 again.
Yeah.
Is in our view at least higher than the chances of it trading
Dipping
to 180,
okay.
right? Because this is a sort of a decade low price for the stock, and a decade ago it was quite a significant resistance level. So we think that at this stage, at this price point, long-term investors will come in and say, well, this was good value last time around, maybe we'll start buying at this point as well. So we want to take a long trade here. You can put a stop loss at sort of 195. So that's quite a, it's like not a bad move. It's 2.5%. It's not really, that.
From that 201 level, right?
From that sort of where it is now, say 200, right? So it's not a huge stop level. You could even probably put your stop loss as low as 190. So you risk $10 and you've got a potential 40 Rand worth of upside. It's a 1-to-4 risk reward ratio. That's a good trade for us. If it doesn't work, that's fine. This is a short-term trade. We're not getting married to the share.
Okay.
We're just taking advantage of what we think is an extraordinary opportunity where these types of things don't necessarily happen every day. And we have this big gap and it falls straight to that support level or resistance level from 10, 11 years ago. That's a high probability setup for shorter-term traders.
And as you mentioned, it's one for the riskier investor.
Yes. So don't, this is, there is also something called the 3-day rule, which was something that Garth McKenzie did, or brought about. Well, I learned it from him and put it that way. Where his rule is if it's down, 15, 20% in a day, wait for the third day and then buy it. So today's day 2. So
let's pause for now.
So this could potentially not work out.
Yeah.
It's like a 50-50 where it's going to work out, but the upside here is 4 times the risk.
Okay.
So that's that's the kind of trade that we want to take.
All right, fair. Let's get into the second pick. Let's start off with Afrimat. And just reflecting on, I guess, the earnings, the group has come out of a very tough financial year. And today's update, I guess, is just evidence that that management team is really putting in the work. We are seeing some of their initiatives at Lafarge seem to be bearing fruit. There's improved iron ore sales volumes there as well. Let's go to what the charts are saying.
I think just as an overall theme for a lot of the South African businesses that we've seen have been under a lot of pressure, right? There's a saying that says, tough times make strong men, right? There's more to that saying, but that's part of it, right? So what we've seen essentially, and we look at this chart also, has been some tough times,
yes,
right?
Definitely.
And this is truly the case for many, many South African businesses.
Yeah.
And what happens is during those tough times, these businesses have to find a way to, increase profitability, decrease capital expenditure, decrease overheads, find more efficient ways of doing business. And we've seen a lot of these companies kind of on these restructuring and reinventing themselves paths. And that eventually, as you can see, as reflected by Afrimat and others, many others before them, there is a point where that starts to pay off and the new structure starts to yield profits and they start to streamline the business in a way that makes sense. And then even during the tough times, they can still do well.
Yes.
And generally what this does is this is a great setup into an expansion phase, right? So if we get a little bit of economic growth, which I think will probably be the case, and we've got these companies that have all sort of trimmed out all the fat and become really strong, if you will, they're going to do very, very well. right, in the future. So from a chart perspective, so that's just a little bit of background. I think that's happening to lots of stuff. Sasol is another good example of that.
Definitely, yeah.
But if you look at this sort of chart here, we've got basically a year-long downtrend, maybe slightly over a year, of just sort of one-way traffic, right? In the longer term, this trend is kind of really started over here, July 2024. But
was that around the Lafarge acquisition? Or was it more of the political?
It was a strange time. I mean, if we look at the top 40 index as well, that sort of was about a year and a bit ago, and we've just been sort of. I think that was sort of really the time when the interest rates adjustments started really happening in the outside world and that kind of stuff.
Yeah, because I think we only started reducing rates around September.
Yeah. We were a bit, but it sort of started becoming evident that this is going to start happening, and that obviously at the time there was a lot of fear around. And even, I was somebody who said it repeatedly, was cutting interest rates is not a good sign for the economy. And that is true. If you look at history, every time we enter into a rate cutting cycle, a few months down the line, 6 to 12 months later, you start entering recessionary territory. So why would it be any different this time around?
Yeah.
So here we are in a situation where we're now very bullish emerging markets and South Africa in particular, and very cautious with international markets. However, international markets are charging.
Exactly.
So is gold, right? And which is something that I think
never makes sense. Yeah.
Both something that I think is going to do really well for us, because we are, precious metals, commodities-based economy. So I think we are in for some good times, while the rest of the world maybe aren't.
Okay.
I see it as like sort of a macro theme where we have a shift of economic power from sort of NATO nations or the Western world to the BRICS nations or the Eastern world. And that shift is starting to happen.
And I mean, you also see it with the Chinese tech counters. Yeah.
Yeah. It's like there's a lot of activity. You can't bet against China, basically. That's, and even in the vehicle manufacturing. All right, look, there's a bit of an oversupply situation in the vehicle space at the moment. I think people went a little too far on the down the EV rabbit hole, and people aren't as keen on electronic vehicles. So internal combustion engine vehicles are coming back, which is great, again, for commodities, right? And energy prices and those types of things. So in any case, okay,
back to Afrimat.
So we have this long downtrend that we can actually probably call a channel as well. So you could probably put that channel line down, which is now broken. So, from a pure charting perspective, you can have a look at this sort of broken channel. You can say that this is the beginnings of an uptrend. We need a couple of things to be true for an uptrend to form, which I'll get into in a second. But just quickly looking at our little momentum indicator here, momentum is sort of pointing up as well. We broke through 20, we broke through 50, came down, tested the 50. Seems that we're going to break through 80. Once it gets through 80, we've got all confirmations that from a momentum perspective, we want to be long. And then we've got, this is relative strength compared to the JSE. We won't get into that today. And I keep pressing the wrong one. I put ATR up here. And then average true range is sort of just a measure of how you can use your stop loss. So, for example, if you took it along here, ATR at this stage is reading 155, so you times that by 2, round it up, so you say 3.2, so 3 Rand 20 lower is where your stop loss would be.
Okay.
And every day you kind of trail it up by that amount using a multiple of your average true range. So it's a nice little risk management technique, if you will. But essentially, so what we have here is the makings of a new uptrend. What we need to do is we need to get above this level here. I'll put in a little horizontal ray. So we need to get above 41.83 on a daily closing price. And then we need to not dip below 36.50 on a retracement. And then we can say that we are in a confirmed new uptrend. For now, we are kind of preempting the changing of this trend by saying that it's breaking out of this channel line, and it's starting to look as if it wants to make a new high. So we're happy to take a long position here to try and sort of ride, let's say, the next year's worth of uptrend in this.
Yes. Okay.
And this will be on the back of the local economy doing better, right? People are going to be building stuff. People are going to be doing, sort of renovations and that kind of stuff in the corporate space. I think that there's a little bit of economic growth that's going to come from this. We probably see interest rates being cut again this month, and that's all kind of stimulating the economy. So I think that we are in a good space for a bit of growth.
And then let's get to your last pick quickly, Nedbank. This is a counter you've touched on before.
I think last time I was on the show, we touched on this one as well. So the thinking here was that we have, I'm just going to switch to a weekly chart, just give me a sec.
Okay.
That we have this sort of zone here where we want to buy the stock in, right? So we're kind of still firmly within that zone.
Okay.
We kind of bounced right off the bottom of it. And you can even see this blue block is like a channel that it's trading in. And we can see I've marked out a white channel here from a historic one, which it broke out of and is now sort of broken back into. So it's a bit of a confusing little story here. But I think essentially what we have is a similar situation where there's this downtrend that's in the process of breaking, or we're preempting it a little bit. But essentially backing that SA Inc. story as well, and we still quite like this stock for as a pick. So our thinking last time was that we're happy to buy it anywhere inside this block, which is a big range. I mean, it's 240 to 210 or 212ish. So it's quite
I mean,
a big.
the banks are quality stocks, if we're being fair.
Yeah, it's a very big trading range. However, I think last time we had this little breakdown and this bouncing at the bottom of this 212 level. So we're happy to, if it breaks out above this level, you can see this little convergence of resistance. If it breaks out through here, I think we have quite a bit of upside and potentially a trend change situation. So we're quite happy to sort of reinforce the buy on the Nedbank and other banks as well, but Nedbank is our preferred stock at this
And I mean, it also helps that, Nedbank is the cheaper one compared to all
the others.
other
Yeah,
stuff.
exactly. Yeah.
All right, Petri, thanks so much for your time and taking us through your analysis of Afrimat, Nedbank, as well as Mondi. Now, that was Herenya Capital's Petri Redelinghuys. And that's all for this week's segment. But stay tuned for lots more coming up right on Business Day TV.